Well, hello everyone, and welcome to GFG Resources Live Investment Summit today, hosted by Six. I'm pleased to introduce Brian Skanderbeg, President, CEO, and Director of GFG Resources. Brian's going to walk us through a company presentation, and then we will be accepting questions live. So as a reminder, you can submit your questions at any time on the Q&A panel on the right-hand side of the screen, and we will get to them after the presentation. And as always, this is being recorded and will be available to watch afterwards on Six.com. There's also a copy of this presentation available for download, so you can grab a copy of it under the Handouts tab, also on the right-hand side. But without further ado, I'll hand it over to you, Brian, to kick things off.
Thanks a lot, Dasha, and thanks to Six for the hosting the seminar today, and to everybody in the audience that's listening. So today I'm going to talk to you about our acquisition. We announced this morning GFG acquired a property east of Timmins called the Montclerg property, and today I'm going to walk you through that story and rationale and a bit of our vision for where we see the project going. Just a bit of a cautionary statement. I am an explorationist, a geologist, and an optimist, and I will make forward-looking statements throughout the presentation. So before I go into the details, I'd like to talk to you a bit about the company and platform as a whole. So we're a North American exploration vehicle. We're established and set up in Saskatoon, and our thesis when we established this vehicle was to be district-scale explorers. And what you're going to see is there's three legs to the stool now. There's the assets in Timmins, Montclerg and our Panandore projects, and there's the assets in the U.S. We're a very strong, technically driven team, and we put these belts together off-cycle, looking at the right opportunity to build these land positions, working in jurisdictions we feel have great potential to yield a Tier 1 style system. And I think as much as anything, it's about is being active and aggressive and being disruptive. And these are some of the themes that we've built GFG around, is continually looking for ways to do things differently to unlock that new discovery. So that's an overview of who we are at GFG and what we're about doing. On the share structure side, we trade in the TSX, put 132 million shares out, and we'd be right around a 20 million market cap today. There's good volume. You can see today we've traded about 1 million shares up in Canada, also a good presence down in the US. We'd have about $1.5 million in cash, so we're reasonably well financed going into this acquisition. And we have some great shareholders. I'll highlight Alamos as a 9.9% shareholder and a very strong backer of GFG. Good, strong mid-tier that believes in the technical ability. And then the institutions, whether you're looking at Gold 2000 or US Global or Delbrook, these are seasoned, highly technically driven, resource-based investors. One other point I'll bring out, insiders. Look, everybody wants to see insider ownership, so I am amongst the largest of the GFG shareholders, and as a group, our insiders hold 6% of the company. And if you're looking for a trading trends, I'll show you the chart on the top right. You certainly haven't missed this story. We've traded generally flat for about around the 15-cent mark for the last 6 months. I think this is a very good catalyst, and moving into Q4 and into Q1 of next year, I think there's some good timing ahead for this stock. As I mentioned, we're a technically driven team. This is the former management team of Claude Resources. Our board of directors is very seasoned, engaged in the sector. Patrick Downey's our chair, Brian Booth, Arnold Glass, and Lisa are all engaged in this gold space and have functioned in it truly for decades. We're transaction oriented, we're technical, we're explorationist operators and developers. We cover all facets of the space within this group. So when we look about why we set up GFG, this slide really demonstrates our thesis. And it also demonstrates the thesis for why we look at things like Montclerg and why we look at things down in the US and Panandore. Discoveries are rare, so that yellow bar is how many gold ounces are found per year, and it is declining. Exploration spend is still remaining relatively robust through this market. And what that means is that per ounce discovery costs are increasing. We believe very strongly that relevant discoveries will be acquired these days, particularly if you're working in areas of infrastructure. So we've put these two belts together off cycle, Timmins and Panandore, and now Montclerg, where we have a large presence in Timmins, and the asset in the US. We look for ways to look differently at the same data. So whether we're undercover in Panandore or whether we're relooking at it, a system at Montclerg, a gold system that's been discovered, but I think only poorly understood and not very well drill tested, we look at data differently. And we look for ways to do different things like ISR mining, in situ mining with our partner G11 in the US. So in trying to find teams that will make the next discovery, these are some of the things I think GFG does well. Now, backing up a picture, a step, and looking at the landscape at Timmins. So we've been active in this jurisdiction for about 3 years, and we own one of the largest land positions in this belt, namely Pan and Dore. We're announcing today the acquisition of the Montclerg block. This is east of Timmins, about 40 kilometers, and the land position there is about 200 kilometers across. Huge endowment, big systems on every side of us, and we're strategically located both along the Pipestone to the east of us with our Montclerg acquisition, and to the west of Timmins with the Porcupine-Dester going across our Penn block. This is an area that is extremely well endowed in infrastructure, mines and mills on every side of us. It's not an exceptionally high-grade camp, and I think people have to remember that about Timmins is many of the mines are working there at a gram and a half open pit or 2 to 4 grams in an underground mine environment. That is the normal grade for this camp. But very, very large gold systems. And you can highlight things like Cote and Borden and Young-Davidson, never mind the Names Timmins camp, and see these are 2, 5, 10 million ounce systems on every side of our properties. Focusing on Montclerg, you can see we're along the Pipestone break, which is immediately east of Timmins, and certainly very, very strong infrastructure there. So when you pair all these projects together, GFG is continuing to build our presence in Timmins and has now added more advanced gold project in the Timmins camp. Zooming in a little more at the land position, so this is a snapshot of where Montclerg sits. The Pipestone break is along the northerly of these two structures. You can see the main Timmins camp in yellow, controlled by Newmont. Great to have a neighbor named Newmont. Kirkland Lake also abuts our land position with our recent acquisition here at Montclerg. And then some of the smaller names, although they're not irrelevant deposits, like Fen, Gibbon, Mayfair is immediately off the map to the east. And then Grace Gold and up into the Bradshaw system is to the immediately northwest of us. So we like this land position. We've always felt we wanted to make a more advanced project acquisition in the Timmins belt, and Montclerg is our entry and the addition of a more advanced project east of it. Strategically located along this belt, and I think there's very great potential to outline a continually grow the system that is Montclerg. So let's zoom in a little more now and talk about what Montclerg looks like in detail. So here's the land position we acquired. If you just put a ruler on that, it's about 10 kilometers along strike, and there's about 120 drill holes here historically. The main zones, we break them up into 2 corridors: the MC trend, Montclerg, and the Skanderbeg trend, the CX trend. So these are the 2 corridors that have been historically tested and outlined, with the vast majority of the drilling has been focused on these. One thing I do point out is that almost all the exploration that's been done here was done in the 70s or earlier. Models were different, sampling was different, our understanding was different of gold systems at that point. So the system was maybe drilled on broadly spaced centers, relatively shallow, but relatively poorly sampled, and you're going to see that as a theme as we go through this. About 23 holes along the CMX trend. The point is you can see the main deformation zone, the Pipestone break. You can see the stratigraphy north of it, you can see the stratigraphy south of it, and you can see the location of the historic drilling. This is a very fertile system. It's the first thing that attracted us to this area, was looking at the core, understanding the system, and saying, there's a big gold system at work here, and this is a relevant land position. Zooming in a little more detail, and this shows you now a composite cross-section through the 2 main areas of historic work. On the right is the MC prospect. This is hosted in rhyolites and porphyries north of the Pipestone break. And on the left of this figure is the Skanderbeg prospect, the CX prospect, and this is sitting in a porphyry that's been in place right on the Pipestone deformation zone. So a few things to point out here. You've got a nice volcanic stratigraphy north, you've got an ultramafic package in the central part, and then you've got the break with porcupine sediments to the south of you. There is a number of gold systems at work here. And as we look at this area and think about why we like it, I'll focus in on the MC prospect. This is the historic work done by IEP, which were the vendors of the property, and several predecessor companies. Now, I'll point out a couple things. Some of these holes are drilled vertically, and they're actually sampled reasonably well, and you can see some nice composites, 123 meters at at 0.75 grams per ton. Nice intercept you can see down in here. And that was well sampled. Now, if we go back another vintage of holes and look at these ones in here, these are predecessor holes, and you can see they're relatively poorly sampled. We will go back, we will resample these. We see that as great opportunity. System as a whole, the MC prospect, very nicely well defined in this environment. Down dip holes are poorly sampled, and we'll be working to resample those. One of the things that attracted us very much was this footwall system. This is a recent discovery from the more recent phases of drilling in 2016. Higher grade, hosted in a different stratigraphy, mafic volcanic rocks, very much wide open, and we quite like these trends in the footwall environment. And then we have the setting over here at the CX prospect, which is Canamax. So this is a Clavo style setting placed right on the break. Only tested relatively shallow. If you look at the analogy to Clavos really didn't become a mine or even a good gold system till 200, 300, 400 meters depth. So when you stand back and look at this, what I feel is that the systems are quite robust. There are a number of gold systems present, and they remain open in a number of directions. So that's a good scale on a cross-sectional view through these ore bodies. Zooming in a little more detail, what I'm going to show you here now is some of the relevant textures and cores that got us excited in looking at this detailed map. So the cross-section on the left shows you the location, the porphyries in the center of it. Lots of really nice veining. And this was very common theme as we looked at the due diligence here on the historic drilling, was that, you know, the system is very well endowed in terms of intense veining. The host rock is extremely well altered, hosted in pyrite, minor amounts of arsenopyrite. And as you go through an individual drill hole, let's just take this vertical hill here, you go through 5 different zones going down a single hole. This is a reflection of what we think is the system, a very nice lower grade porphyry hosted system. In the shallow environment, you can see lots of these grades are sort of 1 to 4 gram, hosted in quartz veined porphyry and rhyolites. You can drill through that, you cross into the footwall stratigraphy, and you start moving into these mafic volcanic hosted rocks. These are much higher grade. They are a sub-parallel system to it, and they are really only discovered late in the exploration history and remain very much wide open along strike. Lots of 3, 6, 8, 10, 12, 15 gram per ton material in the number of holes down there. Very intensely altered, shattered and brecciated host rocks, which is a number of mineralizing events superimposed on them. So we stand back and look at the big picture and say, look, there's a number of zones present here. They've been broadly tested. Some of the historic drilling hasn't been sampled properly, and many of them remain open along strike. As we look to move further to the east on the land position, so I showed you one section in the center of it. Now I've stepped out about 250 meters away to the east. And this exemplifies what we saw in the opportunity of the system. So on this particular section, there's only one hole drilled. It has good mineralization on it. I list the grades on the right side of the map here. And the other legacy hole was very much sampled only intermittently, probably drilled in the 40s. And obviously they were looking at 5+ gram material at that point as a cutoff, which is very different than where we are now. So this was a step out to the east, led our management to really think there's great potential moving to the east in the system along the MC trend. And it's one of the areas we quite like and we'll focus on as we advance this project. And then let's step to the south. Okay, so we looked at the MC trend, now we're looking at the CX trend. This is the Canamax trend. You're on the main pipestone break here, porcupine sediments to the south of us, and porphyry and the ultramafic host rocks. So when we look at the rocks here and the cross section that I show you, it's only been tested quite shallow, down to a couple hundred meters. But what attracted us to this setting was the right age of porphyry. This is a 2670, a young or late tectonic intrusive. Those are the ones that are really the source of the gold and most strongly tied to gold mineralization in Timmins. And then we have the host rock sediments, and we have a setting like Clavos. So Clavos sits about 5-8 kilometers to the west of us. It's an existing resource within Grace. It's been a historic producer from St. Andrews. very robust system. Extends down to 1 kilometer depth. I show you some of the cross sections on the bottom here about the setting of Clavos. And we see the exact same setting at Kanamax in terms of the age of the intrusives, the nature of the stratigraphy, and the character of the structure. So we really like this CX trend as well, and we will be exploring this along with the MC trend. So I think when you stand back and look at that, these two corridors are saying there's a really relevant gold system at work here. It's been tested only relatively shallowly. We will test it along strike. We will test it at depth. And we'll use our understanding that we apply to our systems in terms of exploration methodology, detailed structure, detailed magnetics, and in this case, chemical stratigraphy is really, really key. I'm not going to go into a bunch of details here, but suffice to say, this footwall rock and this footwall zone that we see present in the setting in the footwall of the Montclerg MC prospect is very much controlled by these iron-rich basalts. These are very reactive lithologies. There's a reason the structures are behaving well, and there's a reason the grade is higher down there, and it's because the chemistry of the stratigraphy is right. So I just point this out to say we have a good reactive chemical stratigraphy. The vendor of the property, IEP, Lionel Bonhomme, has done an excellent job at putting the thesis together around why this works to control gold mineralization, and Tim Barrett, his consultant geochemist, was very key in that. So we'll continue to work on building the stratigraphy and applying it to the exploration model. So let's stand back now and think about where GFG is going to go with this project. We've introduced the concept of why we like it is, where we are, touch base on some of the historic drill intercepts and cross-section controls and mineralization. So here we show you back to the snapshot of the property again. It's about 10 kilometers along there. We show you the blown up zone, which is the vast majority of the historic drilling, so 1.5 kilometers of strike length, of which the CX zone sits and MC zone sit in the middle of it. We see good potential to grow those. So on the bottom map, we show you some of the green targets in blue and red. These relate to extensions of known zones. So the red is this footwall zone, high-grade MC trend, drilled with only 4 or 5 holes. They all hit the zone, and it remains wide open along strike at about 200 to 300 meters depth. Great looking target. Immediately step up there and you can drill it. And then you have the direct distal extensions and the long strike extensions of that stratigraphy in blue. You can see them laterally. Then you step up to the main MC corridor. You can see these green targets. Now recall, the core of this might be drilled on 25 or 50 meter centers, but as you step out laterally, you can step out 100, 200, 300 meters, and there's only very widely spaced drilling that shows the system still working quite well. So we will test those lateral extensions. And then we will shift down and look at this CX trend as well, which is along Kanamax porphyry, along the Pipestone deformation zone. So these are kind of what I view as the kind of brownfield opportunities, direct extensions and direct depth and strike extensions. Then there's the greenfield stuff, and this project's 10 kilometers. It's enough to have greenfield targets that have not seen any drilling. We like these conceptual targets. They're still early stage, but we will be stepping up to drill some of these as well. In terms of a work program and catalyst, we're going to step up here and get drilling very shortly in the next month or so. We will drill about 3,000 meters this quarter. The permitting and these patents are in place to really go and execute this. So we feel pretty strongly that these are compelling drill-ready targets that we can step up and have good success at. We feel that the historic work needs to be redone and rebuilt and relogged. So we will go back to the old core and resample things that haven't been sampled right, do the right chemical analyses that we need to do, and we will fly this entire property with the detailed drone mag. All this is really driving a further understanding of the system and guiding our drilling. So I think you see the point is that with this acquisition, GFG is able to add some very compelling drill-ready targets where there's a demonstrated robust gold system working already. Let's just talk a bit about the deal. The deal is, I think, very logical for GFG. We've worked on this deal for about 6 months with Lionel, and we put together, I think, is a very relevant and simplistic deal for GFG, and it works for Lionel. It's a simple equity deal. We give them $1 million in equity on closing. We have 2 subsequent payments at $500,000 each. on 12 and 24 months to be granted. So a $2 million over 24 months in equity payment to IEP, which is a local, a Timmins-based private company. Commitment to spend exploration of about $1 million over 2 years. What I can tell you is we're probably going to spend more than that. We're still working on the finalization of the budget for 2022, but we're going to get out there and start this year. We have money in the bank to start drilling, and I feel very confident that we're going to meet this exploration spend requirement. We did transfer some exploration credits, so this is just another detail of the transaction where we transferred Lionel some credits and IEP to apply to some of their other properties. And there's a modest royalty granted back to some of the vending and underlying companies that ceded to IEP. So overall, the Montclerg deal, we're giving up 5% of GFG's equity right now, and we'll give up another 5% in 12 and 24 months. So it's a simple deal. I think this is a great property to fold into our portfolio. What does it do for us, and why would we do it? It fits our strategy. This team has found gold in these camps before, and our core competencies are working on assets exactly like this. It is a strategic land position along a very productive and well-known break, the Pipestone Deformation Zone. We pair this with our Pan and Doré properties out west, and we will explore these all together. And together we take our team, we expand it modestly, and we continue to push on all these fronts. I like the fact that this system offers scale. It is a demonstrated robust gold system working over a large volume of rock. And it is host to numerous drill targets. When you think bigger picture, this reduces our exploration risk. We've gone from a greenfield explorer with the Pan and Doré blocks, and we've added in something that is a much more advanced project. You have a higher probability of success, and you will, I think, mitigate some of the inherent high risk that comes with pure greenfield exploration, and you're balancing this with a little more brownfield exploration methodology. We have the ability to step out there and do this immediately, and it's because it's patented ground. The deal is simple, and we can get out there and already be exploring and drilling this year. So we have a good opportunity to move the project towards a resource in the near term. We've got a lot of work to do on the historic drilling, some modeling and resampling on our side, but there's a good, robust gold system working there. And I think it has a significant potential to re-rate this company and add to the catalyst that we already have, which if you're a follower of GFG, you know we executed the deal with G11. You know we've got a great land position west of Timmins that's going to generate catalyst. And now you put Montclerg into it, where you have a much more higher level of confidence in outlining and growing this gold system. So overall, why would you invest in GFG? Look, you invest for people first and foremost. But with this team, you get district scale assets. There's now 3 land positions we control in Timmins, the Penn Block, the Doré Block, and now Montclerg Gold. And you get the G11 exposure, which our partners are trying to bring in situ mining to gold in the US and the asset in Wyoming. This is a team that has found mines before. We have a very strong ability to finance, and we put our money into the ground. And what do we mean by that? Our G&A is about $1 million a year. Everything else goes into the ground. So I think when you look at GFG, you have the opportunity to be part of the next discovery in Timmins and to really be part of bringing in situ mining to gold. This is a fully funded exploration vehicle that has a lot of catalysts to look forward to in the last quarter of this year and into 2022. So with that, I will end the presentation and open up to any questions that you may have.
Great, thanks so much, Brian. So now we're going to jump right into the live Q&A. So if you do have a question, feel free to submit them now. But to kick things off, Brian, what attracted you to this project?
Yeah, when we look at that, Dasha, I mean, we've looked at this project for about 6 months. We've looked for a more advanced project. So our filter is really saying, what's the character of system we like? Are the rocks right? And do we see great potential to grow it? So I like the fact that you can drill a really thick mineralized package of rocks. You can drill 2 or 3 different zones that have demonstrated scale, but yet I don't think they've been well understood historically. Further to that, there's another system in the footwall and another system further to the south. So it's the character and scope of the system that attracted us. So it starts with endowment and potential, and then it has to be executable. So getting a deal done these days isn't easy, but if you can find a partner and a willing partner that wants to do a deal like IEP, They believe in us. They actually approached us with this property, and we came to a good agreement. So it starts with the real nuts and bolts of believing in the character of the system.
Right, absolutely. And then why did you decide to add another project?
This just comes simply down to risk as a company. Now, when you look at our methodology in Timmins, we've been exploring at Penn and Dory. We still love these land positions. We're going to keep pushing on them. Ultimately, I think greenfield discovery has its own inherent risks, and you can push along with that, and we will. But if we could pair it with something that was a little more advanced project, like we just have done with Montclerg, what it does is it gives us more continuous news flow. We have a system that's already established that we can grow and start translating towards a resource or a more advanced asset, and we can add it to our greenfield pipeline. So this comes down to risk, news flow, momentum. Adding another leg to the stool is another way to think about it. So we've got Penn Dory, we've got Montclerg, and we've got G11 down in the US at Rattlesnake Hill. So these are the three legs to our stool, and the rationale is really just as I talked about.
Right. All right. Well, could you explain how this was an accretive transaction for GFG?
Look, in terms of adding an asset and the way we view acquisitions like this, you can use a per ounce valuation. In the end, what is GFG buying here? We're buying, 500,000 ounces maybe in the ground. There's no compliant resource on here. This is non-compliant. There's never been a resource published, but we do our own technical work about what we feel the scale of the system is as in its current drill state, and what we think the scope of the system could be if we're successful in growing it. And then we want to look at what we're paying for that. And if we're paying $2, $3, $4, $5, $10 an ounce, which is what you might be paying on sort of portions of this that are drilled off and conceptual in terms of our internal models, that's what we view as accretive, where we can grow a system, we can leverage the historic data set, and we feel we've got a land position that will continue to yield ounces. So the accretive nature to us, I think, is looking at how it helps us in terms of news flow, what we're paying per ounce in the ground, and what's our potential to grow this. And these were all very positive when we reviewed this project.
Great, thank you. Fred has a question here. He's asking, how much cash do you have now, and how much is budgeted for the upcoming fall 2021 drill program?
GFG's got about $1.5 million of cash, about $750,000 of hard, and about $750,000 of flow. These were derived from a financing we did April a year and a half ago. If we looked at what our budget for this program is for the towards the year end, we probably have about $500,000 to allocate to this project, some that we will allocate over to the Penn Gold Project. So what I can say is we have enough cash in the bank to fund this. What we wanted to do was get this deal closed, get it out, start drilling, and we'll find the right window to finance for 2022 as we move forward.
All right, thank you. James is asking, is there a report available on this project?
There is no technical report available on this project. The way these acquisitions are treated by the exchange is essentially you can deem a property material or you can deem it non-material. If it's material, you're required to publish a technical report as part of that acquisition. You can go through an accelerated acquisition, which we've gone through or will be going through for this one, and there is no technical report filed for it. That being said, we're more than open, and I would encourage you to reach out to Mark LePage or myself to talk about the project. We're happy to provide you more technical details as required. I think the last report, one from a predecessor company, would have been filed in 2013. We can happily provide you that, although it's not something that GFG would sponsor. It's a legacy technical report.
Okay, thank you. So the historic drilling shows many portions of no essays. Why is that?
This is a common theme. When you look back in projects that have been drilled for the 40s, 50s, 60s, 70s, and even into the 80s, cutoff grades in these systems and the concept of really bulk open pit mining was really less common in many of these camps. And so as a consequence, you'll find that the geologists and the operators at the time would have focused solely on the veining or solely on an intensely altered segment that might run 3, 4, 5, 8 grams per ton. But they wouldn't have sampled something that might be between 0.3 and 2 grams per ton, just because it wasn't meeting cutoff grades at the time. So this is a character of many of these drill holes. There was, as I said, there's 80 holes drilled before 1967, and these holes are poorly sampled. Now, some of those we have, many of those we don't. So some we can go back to resample, and some of them we'll just have to accept that we would have to re-drill some of those areas with the understanding that the legacy data is not representative of what's there. Suffice to say, I think there's lots of opportunity to grow the system in a number of different ways, leveraging the historic data set in the drill core and building our own as well.
Great, thank you. And lastly, will this be your primary focus? And if so, what are your plans with the Penn and Dory projects?
Yeah, good question, Dasha. I think it's important to talk about this with our shareholders. We will take a balanced approach to Timmins. We're not abandoning our Penn project at all. We're not looking to fold it off or anything like that quickly in terms of an option property. We will advance all these projects together. What I can say is our dollars will continue to be allocated to Penn. Our dollar and expenditure in the U.S. are very minor in the sense that the Rattlesnake Hills project is covered by our operating partner G11. So I think I'd like to see a good balance between Montclerg and Penn and Dory expenditures, and that we put forth a balanced program for 2022. Obviously, we'll be doing a good amount of drilling on Montclerg, but we'll also be doing a substantial amount of work on Penn and Dory projects in tandem with that.
All right, well, thank you so much, Brian, for taking us through the presentation and the Q&A. Thank you to everyone who also attended and submitted questions. If you do think of another question, feel free to reach out to GFG directly. Their contact information is on the slide over here, and you can also find more information on their website, www.gfgresources.com. And with that, I'll pass it back to you, Brian, just for the final word.
Thanks very much, Dasha, and thank you all for tuning in today. If you don't know us already, please do reach out to Mark LePage or myself. We're more than approachable, happy to meet new shareholders or even just answer interested questions. And we hope you guys have a happy and enjoyable investment space these days.